And so now we're just going to go back over what we were looking for last week, and we'll just review the price action. We'll see how price played out and look to see exactly why price has done what it's done. So my voice is getting a wee bit better. So I'm going to start by going on to the, we'll go to the daily chart. So last week I outlined in the red arrow what my thoughts were, what I was looking for. So as you can see here, the general theme was we were going to come up, we were going to come lower. I didn't anticipate we were going to come as high as this. This was quite exaggerated, this move. But again, we'll come into this as to why prices came to this level, because we do know that nothing in the markets is random as much as people like to think. And in fact, there's just been a trader, a Wall Street trader, that's come out and started talking about algorithms, which is what we think. It's all run by an algorithm. So, sorry, I've put that as a bullish order block, but that's actually a bearish order block. So these two consecutive candles, two consecutive up candles, and then we've broke this short-term low. We broke this. So here this becomes a bullish order block on the monthly time frame. So prices actually come up into here and it's reacted off of this key level. So I'm going to go back down into a weekly. Here, if I take this wick, so this weekly wick, you'll see there we never got quite as high as that. And the interesting thing is, so this, I'm on the weekly here. So even here, there's a fair value gap between there and there. You'll see, so if we take that across, price then closed beneath that. So again, that points to being bearish into the daily. We came to the daily, and again, so as prices from here on Friday, Monday, we rallied up. Tuesday, we made high of the week. We came down between Tuesday, we had Wednesday here, Thursday, between the low of this candle, this point here, and the high of this candle here. You'll see that fair value gap. Now, price rallied up into here and then came lower, but we closed below this area. So again, this is all pointing towards bearishness. So my outlook is still, we're going to come down into this area. And if we actually look, so last week, this was all the news that was out. It was quite a heavy news week. And this coming week, some of the big ones, we've got non-farm payroll here, non-farm employment, sorry. We've got the FOMC statement and the Fed funds rate. So they're expecting to hold rates where they are. And what you'll tend to find over the next year, rates will start coming down. We're at that point now where, in actual fact, the banks in America, there's a chart for that, I'll maybe share it next time, it's looking quite, they're in trouble almost. So generally what happens is they raise rates until something breaks. So that could well be it. And then you'll see here on Thursday, we've got the pound official bank rate. And again, we're sitting at 5.25 and it's expected that we're going to stay the same. So this will be the drivers for the moves on euro. So I've talked on euro here, but we know that DXY, the index for the US dollar, is inversely correlated. So whatever happens here, the opposite will be happening on the euro. So again, look at this. So here we've ran liquidity, we've taken out this old low, swept that liquidity, and then we've moved higher. Now, similar to EU, so between here and here, we've got a daily fair value gap. I'll make that bullish. And we've come down, this represents, so within that day, we opened here, we ran down, we ran up, and then we've closed in this position. So this fair value gap, daily fair value gap, has been respected again. So again, the expectation is now that we come probably lower at the start of the week, and then we push up into this area here. So similar here, that daily fair value gap in the opposite direction, it got respected, we ran up through it, and then we've closed below it. So again, that points to bearishness. So my anticipation will be for this week, we see further downside. I got a 4-hour chart. You'll see we ran up into here. We actually ran this, just swept this liquidity here. So anyone that's short here in the market, they maybe had their stop loss in here, and the markets came up and just tapped them out. And then we've turned back round and we've came lower again, and that's that daily fair value gap that we were just talking about. And like I say, for this week, the expectation would be that with the news, we now start to see us coming down and taking out. So we've already taken this one, that got just swept, but we'll probably come down. I'm anticipating we'll come down, take this, and the ultimate drawn liquidity is down here, which is a monthly, 1 month fair value gap. So between this candle's high and this candle's low, this is an inefficiency in price. So the algorithm will seek to reprice that. It doesn't need to come all the way down and fill the whole thing, but that is the drawn liquidity for now. So we'll see what happens. And although we're biased, Control Z, although I'm going to go a 60-minute chart, pull that up. So although this ran up way beyond where we thought it would, it's actually, there was still opportunities to make money. And once you realize, like once you get this up and down and we start closing back within this range, you understand that this was just a liquidity run. It was sweeping liquidity, and now we'll be looking to capture some further downside. Probably fine. So equilibrium for this, so from here to here, this low to that high, that's quite a big swing. So if we take here and I do PD, so this shows you the premium up at the top and discount. So just up in here is 50% of this range, and you'll see that it's just above this high. So there's actually the potential here that for FOMC here on Wednesday, there's a chance that we actually come back into this range, this overall range here, and we sit about here, filling in some more of these inefficiencies, and taking this old high, and then maybe further downside. But we'll wait and see. But that's the bias. So I'm only looking to short the market, really. I'm not looking to buy, because that's not my bias.